Hi, everyone. Ira Coiner here, president and founder of Triathlon Partners. Thank you very much for tuning into today's episode of Triathlon Partners TV, where we will be discussing survivorship life insurance and estate planning and the role that it plays and why it is a fantastic product to include in your estate planning. Now, before we begin, I would like to wish all of my clients and viewers a Lashana Tova and hope the recent holiday has been very meaningful for them. Now, let's get back into the content of the episode. Now, what is a survivorship life insurance policy? Survivorship life insurance policy is based on the lives of two people, right? So, as opposed to regular life insurance, which is based on one person's life, when one person, and that, on those policies, when that person who is insured passes away, the death benefit is paid. Now, on a survivorship policy, also called a second to die policy, when the second person of the people insured passes away, that's when the benefit is paid, right? Now, why is this a very good insurance with estate planning? Because when you have a couple and when one person passes away, all the estate usually transfers to the second person. And then after the second person passes away is when the estate tax is due on the assets of the estate. So we want to match up that tax bill that goes out with an income stream that comes in, and that income stream would be the death benefit from the policy. Now, survivorship policy is much less expensive than individual life insurance because the payment is based on the second person passing away. And the more people that are in this group that you're insuring, the greater chance that someone's going to live a very long life. Right? So that's why it's less expensive. So going forward, we know, given that, we know number one, it's very good for estate planning. And another great use for survivorship policies are to fund special needs trusts or provide cash flow for children that maybe you want to enhance their income. And that's because, well, while you're alive, you are able to subsidize it without having any tax implications. But once you pass away, a lot of your wealth is going to be gone due to taxes, right? So right now, just to review, we understand what the survivorship policy or a second to die policy is, and we know what it is best for and why people use it, right? So again, the benefit pays off after the second person passes away. So it's not good for all situations. In fact, it's terrible for some situations, but it's ideal for others. And part of that reason it's ideal is because the premiums are less expensive, because the life expectancy of two people is greater than the life expectancy of one person. So the insurance company has to pay out the death benefit at a later age, presumably, right? So when we look at this, and I want to give a real example, we have a couple who's 60 years old and they're in standard health class, regular health. And we're going to look at this policy. I'm going to throw out some numbers, and it's based on paying the premium for 12 years, right? So first, I wanted to compare what getting individual policies are to the joint policy to sort of give everyone a reference point on how much less expensive it actually is. So if we were insuring a 60-year-old male, premium for 12 years for $1 million, the premium would be about $44,000 a year for 12 years. Now, if the 60-year-old women are less expensive to insure than men, that premium would be around $36,500, $37,000 a year for 12 years. We take that average, it's somewhere in the 40,000 level. We would get $500,000 on each. After two people die, you're getting that $1 million. You do get some of that money beforehand because one person is going to die first, right? Now, when we look at the joint policy on the same couple, same age, 60 years old, the premium for this comes in under 30,000, right? So when we're looking at under 30,000 for the joint for $1 million versus something a little bit over 40,000, you're saving quite a bit. It's almost actually $11,000. So that's quite a lot of money over a 12-year period. and we're looking at it, and it's about a 25% savings. So something like that is a reason why it's much more attractive, right? So when you buy any permanent life insurance, and you need to buy permanent life insurance for estate tax purposes, or to fund a trust where somebody is dependent upon your income, you can't risk that term is going to not expire before you pass away. You have two choices. You have an index universal life, or you have a whole life, and that's the same for survivorship. Now, I know I've mentioned these things before, and I've gone into a little bit of the product space, but I haven't actually gone into what the costs are for these products themselves, right? So for these products themselves, and I did it again over a 12-year period, it just that was the best comparison I can get. And the whole life company is a very reputable, one of the top 3 whole life companies in the country, and the universal life is again a top universal life underwriter. So these are top-notch companies, very equivalent in terms of their popularity and their product suite. But whole life, because of the way that it's structured, its fees, the way that its guarantees are structured, are a policy for $1 million on survivorship is $52,000 a year for a couple, as opposed to the universal life for a couple is 29 and a half. It's, as I said, under 30. So we're really talking about almost a $22,000 difference over a 12-year period for each year, right? So that's over $250,000 of premium, right? And the insurance we're buying is only for $1 million, right? So from that standpoint, this is something to really consider what type of insurance, what insurance chassis you want to have your survivorship, or what you want your overall permanent insurance to be, either whole life or universal life. So I think, this was, I hope this was very educational video for everyone. Of course, that's part of our goals here at Triathlon Partners, to engage, educate, and empower our clients to make a decision that's best fits their objectives. And so I hope, again, that this was a great foundation in terms of learning about the survivorship policy, why people use the survivorship policy, why it's less expensive than individual policies, as well as the cost differential between a whole life and an indexed universal life policy on these things. So thank you very much. Once again, Triathlon Partners, we love our stuff. So please, subscribers, thumbs up, friends and followers, we love you. Thank you very much for tuning in, and everyone have a blessed day. Take care.